Good evening. This is Faye D. Souza. Thank you for joining us. This is the live on India's GDP numbers. Now, there's been a shocking drop in our GDP number, and I want to actually break it down in English and tell you what's actually going on and whether or not this is going to hurt you and why this is a problem that suddenly has gotten all the economists sitting up and they're like, okay, what's going on? Let's take a look at this. Let's break this down. Now, the thing about these numbers is that it tends to sound very technical. And if you pick it up in a newspaper and you try and read that article, it doesn't really, it's not written in a way that is easy for any of us to really break down and understand and figure out what does this mean for me. So that's the aim of this particular video. So if you stay through to the end, we will break down where the pain is actually coming from in our economy and why you should care whether or not this is going to last for a long term and if finally it's going to hurt you. All right, so that's the whole point of it. I have been traveling all of last week and I was in a really important seminar. I'll tell you about that later. And that's why I wasn't able to do this earlier, but I'm here now. So let's get through it. I want to start with this one particular opinion column in the Indian Express that I will share with you. This is written by Rajani Sinha, who is an economist. And she's basically broken down all of these numbers. So that's the one. It says GDP was lower than expected, and here is how to move ahead. That's the name of the article. You should look it up. It's really beautifully written, right? So she talks about why this is a problem. Now, remember, in 2023-24, we had a GDP growth of 8.2%. Now, the rest of the world was slowing down post-COVID, but India was doing really well, and that is what we were particularly proud of, that we're doing really well. Now, in the first half of this financial year, 24-25, we came down from that 8.2% down to 6.7%. And everybody's like, ooh, it's down, but maybe it's not so bad. The second quarter numbers for this financial year, so that's basically for the months of July, August, September. That's come out now. So it takes some time to put all of these numbers together. So the growth numbers for July, August, September is 5.4%, down from 8.2%. And you're like, ooh, that's not good because it's lower than any estimate in the market. So everybody sort of estimates what the GDP number is going to be like, and the market then, the stock market sort of pegs whether you want to see the most ambitious or the most optimistic estimate, or you want to see the most pessimistic estimate. The most pessimistic estimate was also like 6%. The optimistic, which is the RBI had estimated 6.8%. We're at 5.4. This is not good. And we're like, okay, now what to do? Break it down and see where the numbers are a problem. Now, fundamentally, let me tell you this. This is where the issue is. According to the RBI themselves, our inflation, which is the rate at which things are becoming more expensive, is 6.4%. Our growth is 5.4%. What does that mean? There's no money in your wallet. The money that you're making is not keeping up with the kind of spending that it requires to simply run the same kind of life without changing anything. So even if, so to put it, so if we look at a sectoral breakup, and GDP is a combination of how much we are making, like so what are we producing really? So and who's spending. So let's take a look at it. It is made up of industry, agriculture, and services. These are the places in which we produce. The real pain is in the industry sector. The industry sector, which was 8.3%, is now 3.6% in this particular quarter. So quarter to quarter. So that's where it's gone. So and out of industry, mining, manufacturing, electricity production has been hurt the most. On the other hand, there's agriculture. We've had a really good Kharif crop season. So agriculture has actually done really well. So which means the people who depend on agriculture for an income, they've had a good quarter. Services have sort of stayed where they are. There's not been a very sharp either drop or movement. So industries is where the issue is. But industries is dragging everybody down. Now let's take a look at spending. Now, even in spending, there's consumer spending, which is what you and I spend to buy things. There's government spending, which is what the governments, both state and center, spend. And they normally spend on policies, on building things. They invest in like long-term sectors. And then there is private investment. So these are the big categories. So if we look at consumer spending, it's not good. Consumer spending is lower. mostly high frequency, what we call high frequency economic indicators. So if I say it in English, things that you have to buy a lot, which is FMCG stuff. So soap, shampoo, all of these things you have to keep buying, right? So the sales volumes for FMCG, the sales volumes for two-wheelers was better in the rural sector than it was in the urban sector. Now, why is this happening? Two-wheeler sales is very important in India because it's the first vehicle a family buys. So it's an indication of people going from having no vehicle to having one vehicle. It's two-wheeler sales. So two-wheeler sales becomes really important. So even as if you consider all of us, right? The first bike you buy is the first vehicle you buy, and then you move to like a better bike, or then you move to a car. That's normally the progression. So two-wheeler sales is an indicator of people moving out of one category into another category. Two-wheeler sales apparently has been improving in the rural sector, but urban consumption is very moderate and is not seeing a sharp jump. Uh, there's, of course, a massive problem of food inflation. Food has become really expensive. But the real issue is the urban job market that has not moved. So either people have not got jobs, people have not got jobs to move into or to upgrade into, and they've not got a raise that's good enough to actually keep up with inflation. And that has resulted in household incomes getting squeezed. So what happens when household incomes get squeezed? Obviously, money runs out at the end of the month and you stop spending on discretionary stuff. Now let's look at the other category, which is government capex. Now, a lot of India's growth over the last year, and several economists have complained about this, has been because the government has been spending a lot, as you can see visually, on big infrastructure projects. They are building ports, they are building airports, they are building big highways. Many of these things are going to specific companies, but it's spending coming out of government. And so that's money that gets poured into the economy, and money circulates in the economy. That's a good thing. But what it does, and the criticism this has received, is that it tends to put a blanket over the fact that there is no jobs and actual people are not spending, government is spending to cover that up. That blanket, now we've removed it, and underneath that blanket is not good. So what has happened is the first quarter of this year was election season. Remember, there was a big election. After that, there were a couple of state elections. And when there is an election on, because of the rules of the election, the governments can't spend. And so there was a slump in government spending. And if you look at it, um, the center spending for the first half of the year fell 15%. The state government spending fell about 11%, and that is what we're seeing at this point. And investments by major public sector enterprises, so government companies, they've also come down by about 11% in the first quarter, and that is where the pain is. And so a combination of all of this has dragged down our GDP. So the question that we have to ask at this point is, um, will this continue? Or is it going to stay this way? And is that going to be a problem? Now, corporates are expected to show better numbers. They had showed really bad numbers. I'll take you through that as well. They're expected to show an improvement. Government sector spending is going to come up, obviously, because the elections are over and now government spending will start again. And food inflation is expected to improve a little bit. But even if all of this happens, a 5.4% quarter will mean that we will still grow for the whole year about 6.5%, which looks the same as our inflation number. And that means that effectively zero growth. Now, I want to take you to this Indian Express article on Donald Trump, and these are things that are going to have an effect on us. Remember, also, our exports were moderate; they were not great for this quarter. Now, Trump coming in as America's president, and he's going to take over in January. This would mean for the long term that he's going to become protectionist about his own government, about his own country. Remember, he's already said that he is going to put tariffs on things coming in from China because it's taking jobs away from America. He wants jobs to be created in America. He has now issued a new threat. He has said that BRICS, which includes India, if they consider using a different currency to the dollar, he will bring in tariffs. Now, this is just the kind of politician that Trump is. He's protectionist. He believes in protecting his own country. He's sending messages that he's not above protecting his country from his friends, which includes India. And this is quite a sharp sort of message to come out. And what will this mean for Indian exports? It means that you have to stay on your toes and you don't know what he's going to do when. And that, I mean, so India is in a really good place when it comes to our relationship with America. We've done a lot of work in the last 10 years during the reign of the Modi government to improve our standing and to improve where we are in terms of negotiation with America under Mr. Jaishankar as well. And so we're in a good place. But Trump is an unpredictable man and he's going to keep us on our toes. And so that is going to have an effect on the long term sort of play of our exports and how much money we make from our exports. Remember, America is our biggest market for our exports. I want to take you to another article here by the Mint on the Indian stock market. Okay, what does all of this what impact does all of this have on the Indian stock market? Now, experts, true to form, the Indian stock market was like, oh, that's bad news. But okay, let's recover. Okay, so it's not really a long-term impact. We didn't do so badly. We saw, a shocking drop in our GDP numbers. We also saw really bad numbers from corporate India, but the stock market was like, meh, let's keep running up. And that suggests to me that our stock market is being the right, I mean, I'm looking for the legally correct term, fluffed up. It's being fluffed up by certain players who like to keep it high because they use it as an indication to say, oh, our economy is fine, look at the stock market. And there are manipulators who are manipulating our stock market and keeping it buoyant. And I think that that's what's going on because we've seen this massive drop in GDP. Under normal circumstances, we should have expected a larger reaction from the stock market, but we haven't seen a larger reaction from the stock market. It tanked a little bit, but it recovered quite quickly for the week. And you can look for those numbers online, and they're readily available. And of course, immediately we had a lot of these traders, the big traders in the stock market, people like Motilal Oswal and a couple of others who said, yeah, it's fine, it's nothing to worry about. And we advise investors to remain overweight in large caps, and if there is a correction, you'll be okay. And there's a lot of that talk as well. But I want to show you um, another article about, India's Q2 results, which was the worst quarterly showing. And this is, the Economic Times. I'm going to put that up next. India's Q2 results was the worst quarterly showing we've seen in a while. So India Inc. is not in the pink of health. So the big corporates also are not showing that kind of growth that we expected them to show. In more than 4 years, this quarter was the worst we have seen from India Inc. And that is actually sort of raising concerns that this could be a larger problem. I'm taking you to the Economic Times article about corporate stress. We'll just open that up for you. Um, Forgive the ads. So this is where it is. So basically, this is also an article in Bloomberg that has said that Indian companies have registered their worst quarterly showing in more than 4 years in this July-September quarter. And it sort of shows that this is larger than just one blip in one particular, quarter. So there's a report from Motilal Oswal that this article has quoted that says that since August 2024, we've reduced our FY25 estimates. We're expecting lower growth for this year, fundamentally. It's a really complicated sentence. And the economy is cooling faster than anticipated, which means that we had expected at our 8.1, it's going to come down, but nobody had expected it to come down this quickly. Now, here's where the problem is. And like I told you, wages have been falling for the urban middle class and for the urban worker. Now, it's contracted for the first time since the pandemic. Consumer companies like Maruti, Suzuki, Hindustan Times are showing, Hindustan Unilever, HUL, are showing weaker earnings. It means that the middle class is not spending and they're not buying their products. Why is Maruti Suzuki most important? Because in the economy that we're seeing right now, the rich have gotten a lot richer. So if you look at the expensive cars, like if you're looking at, say, the Mercedes or the BMWs or the luxury cars, they're actually doing quite well. If you look at Maruti Suzuki, which is the entry level car that people buy when they want to buy their first car, The sales have been muted for a while, and so that is now showing in their numbers that they're not making money, and that is a problem. Leading FMCG companies have reported a decline in margins in the September quarter on account of higher input costs, because remember, inflation has gone up, and ultimately slower consumption. So what are they going to do? They're going to shrink all the packets because they're not making margins on each thing that has been sold. Now, slowing urban spending over the last 3 to 4 months has not only hurt the earnings of consumer goods firms, it has raised questions about the structural nature of India's long-term economic stress. Now, there is another factor here that I want to bring up, and that is RBI's interest rates. Whenever inflation is high, RBI raises the interest rates or maintains high interest rates in order to control inflation. Now, interest rates are already high. Inflation is already high. Sorry about the dog. Uh, it, and you know, and if RBI continues to keep high inflation, what does that mean? That means those people on floating interest rates on their home loans are going to have to pay higher EMIs. That takes out of the money left in your hand. If you want to borrow for an education loan, if you want to buy a vehicle, if you want to buy a home, it all becomes more expensive because the interest rate is high. And so all of these decisions become difficult to make. And so you start squeezing your spending and saying, "Abhi nahi khareedte, baad mein khareedte." What does that mean? It affects corporate India. What happens when it affects corporate India? It affects jobs and salaries. What happens when it affects jobs and salaries? We're going round in a circle now. That's the problem. Now, is it all very bad? Are there any silver linings? Some of the silver linings that have been pointed out is, yay, festive season, right? So we had Diwali, and hopefully people bought things during Diwali. We had Ganesh Puja, we have Dasera, you have Diwali, there's Dhanteras in the middle. Did people spend money? Did people have the money in their pockets to actually spend? Did they get bonuses? Did they get bump ups in their salaries? That we'll actually see in the next quarter, and that might make a difference. Um, we understand also from one particular article that Indian corporates have been pushing ambitiously, saying, "Let's push, push for growth, and that will actually make a difference for us." And so we're hoping also, like I told you, we're hoping the government spends improve. We're hoping corporate India starts investing more, which means they're creating more capacity, buying more machines, making more product. And we don't know how that will work if they're seeing lower consumption demand. So it's about them betting on the economy and saying, no, we're going to make more, we'll push more, and that way the economy will improve. You just imagine there's a factory with 10 machines that's making something. They invest and they add six more. That means more jobs. That means more production. That means they're going to buy more input. So that will actually lead to sort of a rolling of the economy, the rolling of the wheels again. And where there are some reports that say that that is likely to happen. Staples and essentials are largely bucking the consumer slowdown and showing double-digit volume sales. So like the basic stuff, like I said, when you're going through a tough time, you will cut down on the discretionary spending, but the staples and essentials apparently are doing really well, which indicates that consumers are not cutting spending on household goods. And that is a good thing. You can read good, that's good news, technically. And that's what a lot of companies are also going to be, sort of relying on. So that's where we are right now. We're hoping that the next couple of quarters will show an improvement. And so the cumulative growth for the rest of the year will actually be a good idea. That's all right. Um, Thank you so much for staying with us. Of course, this is problematic. Job creation is a major problem, and it's a major problem in urban India. Let me know in the comments section why you think job creation is a major problem and where that issue lies. Remember, there is a lot of a debate about gig workers, if that is really truly job creation, or it's not job creation, or it's not good job creation. And there's a question there really if the gig working economy, which is largely what urban India is doing right now, if that is quality or not quality. So leave me a comment in the comment section, and maybe we'll do another explanation on the gig working economy and what that looks like. All right. Thank you so much for tuning in. Remember, like, share, subscribe, and let me know if these sort of videos are useful and if we can do more like this for you. Have a nice day.